Good afternoon. It's 12:11 p.m. Pacific Standard Time, date 8/18/2013. This particular area where my pointer is the S&P 500 index. Over here where I'm showing the chart is when we called for the reversal up here that the summer rally was open and we were buying at that time. If you follow over here, you're going to see in the title bar the S&P monthly calendar September monthly expiration, buying the put options on that index because we did. And at that time, we've had a correction in the markets that we said that we would have. It's on stockmarketfunding.com. Down here, what we were doing also is called the SSO. All charts are 60-minute time frame MMTs. So when the bull, the SSO was short a bull, you can make money when that's falling. And then over here in this chart, we can clearly see that this is the SDS 60-minute pro ultra short. So when the bull was going down, we were short the bull and long the bear. Then when the S&P was going down, we were up at the high end of the range, buying slightly out of the money $1,700 puts that were wholesale on this very date of 8/5. Now, let us not forget, on 8/2, we were calling for a market correction. What you're going to need to do to get involved is get in the free 5-day trial. That's number one. Number two is to look at what we were telling the public and our qualified MMT market makers and what side of the market to actually be on. So, in this particular box is a video box. Right now, it'll take you back to other dates. And if you put on the cursor, it'll tell you right there, daily versus weekly, summer rally is over. And so when you go back in the dates or you scroll down on the website, you'll see here, you can find it when we were talking about the time that the VIX calls were buyable and the S&P 500 puts, and the timestamps and the analysis and the transactionable trades are right here before us all. We cannot deny that the analysis is correct and what side of the market to be on. It's very, very, very important when you get involved in the market maker school. It's not a day trading model, but nonetheless, you're going to find everything that you need. Right now, we're having a little problem with our video player. It'll be fixed later in the day. But you can clearly see by the titles here. And what we're doing with our MMTs is, how do I get paid by shorting the bull? That's one payday. How do I get my secondary payday? Is by understanding when to buy that bear, and it went straight up off of the bottoms in the ETF. The third payday is when we were up at the top here reversing, is the $1,700 put on the S&P 500 went from the very wholesale lows that we talked about, which was $25 now, and they trade in stages. You can clearly see how it traded right up here to the high of $37 in that stage. So within the S&P 500 on the rally days up, the contracts changes values. So knowing how to get out up here and then knowing when to buy the pullback on the actual index using both the bull cycle, and these are all 60-minute charts now. If I want to show you a 30-minute chart on both the bear and the bull like this, that's half the distance of the 60, you can clearly see that when that's breaking down, that's breaking out. When that's breaking down, the value of the puts, they gap up. Look at what they did right here on the S&P 500. When we gap down here on the S&P 500 index, where my cursor is and my pointer, we gapped up right over here in this area to the high of 55. Well, here's a high, $55. There was another entry in the contract. There's always several entries when you're in the option pit and you're in the certified market maker index options. They pay a lot of money, both calls and puts, both bulls and bears. So once again, we are saying that this particular correction over here, and I'll broaden the chart a little bit, this is the actual index. And what I'm really going to show you is there is some problems here with the index, because I'm going to just show you quickly what that weekly format looks like. It's going to come down here and test that 20 week. That's at 1635. If it breaks it, we're going to come down around 1611, right above that 1600 area. Now, with the dog days of August upon us, everything is going to trade a little bit different. That's what the S&P looks like. So, if the S&P gets support level and starts to go back up on a daily level, daily relief rally, that means that these very put options right here, and I'll show you what they look like on the weekly level as well. They made their weekly lows here, and that's the first up week. Remember, these were $80 a contract over here, and that date, my friend, was on 7/8. Yeah, $80 a contract. Then look at the value up here. The high was $101 a contract. So when the S&P was in rally mode, as we went up to the all-time highs in the S&P of 1700 and some change, it was right there. So there's the high, 1709, right below that 1710. That was our price target months ago. So once again, 1710 there and $25 at the bottom right here and now. MMT, $25. The last high print on these, $55.20 on 8/12. That's this weekly. So that's what a weekly view looks like. On a daily view, you can clearly see where the contracts were down here at the bottoms. But once again, back up to 60-minute view. This is a $1,700 put relative to the 1,709 reversal on the S&P. And we were buying them there. Now, back to this side of the market, the bull was peaking. It couldn't take out any more highs on the 60 over here. Bam, this is where we really called where the acceleration of that selling would be. And you can short this, and you can be long the bear side, and you can buy the VIX calls. Once again, we are just updating because we're in the dog days of August. This is a weekly support level right here. The daily level on the S&P 500 index, you're right there at a major 50-day moving average right there. That's that red line. You've already on a daily level from the reversal highs that we said. We have all the evidence. The thing about it is I get paid by the bull going down, I get paid the second time with the bear going up, and I get paid all on the S&P 500. I get paid 3 ways on one movement in the major markets. If you want to get involved in the market maker school, which I know you do, who wouldn't want to, is you do the following. You go to stockmarketfunding.com, and the video player, while they're working on fixing that, you go, you click the free trial. And you get started now. And you go through the market with this live. Go back to the trading tab, open an account. Click on open an account. When you click on open an account, please hit that open an account here. That's your new MMT Market Maker account. Viking Capital Contractor Agreement. Get busy, fill it out, read it, ask all your questions. They'll all be answered during the free 5-day trial. That's exactly what I can tell you. So I want you to know that. So the best thing to do now is to understand that we're already at a critical 50-day support level. What can happen in great bull runs is you can pop off of that support level, which would take that $1,700 put all the way. Well, it would make it go down in value because that's the current high. They can still go higher. Remember that. They were much higher in value when I showed you on the weekly, because they are. It just depends on, see, here's the weekly. They can still travel up. Well, let's take a look at this last high right here. This particular high let's get on this particular date. That date is 7/8 MMT, and that high was $79, and the low was 54.80. So if you take a look at where this is right now, where it closed, we're closing at 51. It can go that way if we continue, if we break below that 50-day and we come right down here at 1611 area. You got a 100-day moving average at 1631. That's this line right here. So every bull is going to get a support level. It'll bounce up. They can bounce up 3 to 5 days in other markets in light volume in August. So the whole moral of an MMT is how I got paid 3 ways on an index called the S&P 500 and what would be applicable to making money. But remember, you got to be a wholesale buyer here. You also have to buy wholesale over here, and you have to be selling short up at the highs over in here on these kinds of things. Get signed up now. I can tell you that this is one of the best ways to get around markets, to get paid 3 different times of one directional price movement with the right analysis here and now.